All right, so let's talk about Nike. So they've been in the news lately because they have a new ad campaign featuring Colin Kaepernick. You might know him as the guy that kneels during the national anthem at NFL games. So this is obviously very controversial and many people are upset about it and they're boycotting Nike, so on and so forth. And so you're hearing about their stock a lot in the news now, and it kind of drives me crazy because, like, you'll hear this news headline, Nike shares are up today, Nike shares are down today, and I'm just sitting here like, well, yeah, but that's not really how stocks work, guys. And I've been trying to correct this everywhere that I see things, but I'm kind of getting tired of typing. So I figured I would just make a video and show you guys. And before I go any further, I just want to warn you, I'm very sick today, if you can't tell. So I'm sorry if I sound gross. I feel gross, but it was just driving me nuts. So I'm going to make the video. All right. So here we go. So what you're seeing right now in front of you is a stock chart of Nike. And this little point right here, that was the first bit of trading after the new commercial was announced. Okay. So you can see here, since we, so we can move the chart here. I just want to be accurate here. So if we move this so that the beginning of the chart was at the previous day's close, we can see that at one point Nike shares were down almost 3.4% or so. And at this moment, they're up about 0.56. We're up a bit more today, but markets have not closed yet today, so we'll see what happens. Now, here's the thing. Whenever you're looking at this sort of thing, there are two things that I want you to look at, and they are this. One, is this kind of move unusual for this stock? And two, what is it doing compared to its competitors? So let me show you what I mean. Let's go back to a daily time frame here, okay? So, and I'm going to move the beginning of the chart to be 2018. Oh, I'm gonna like zoom in way more than that. Come on. Okay. So there's since the beginning of the year. Okay. Point out to you again here. Here was the move that we're talking about. Okay. Really, you know, this whole area right here. Okay. Now, is a move like that unusual for Nike? Well, not really. Right? This is actually somewhat of a volatile stock. A move of 3% in Nike, which is up 31% this year. Not a big deal. So that's the first one. And the second one is, how is it doing compared to its competitors? So the first thing I like to do is always like to pull out a benchmark index. So the big benchmark index is the S&P 500. So let me pull that out there. That's that blue line you see right there. Okay. You can see Nike, the S&P 500 is up about 7-8% this year. And Nike is up 30%. Okay. So that tells us something very important. This is a stock that moves. That could be because they are a high growth company or they're considered a risky play. And when you have that sort of a thing, it tends to move more than the index does. Okay. And actually, when you look at some of its competitors here, okay, you can see that many of its competitors are also doing quite well this year, with the exception of Skechers. Here's Skechers. 19th of April, it took a big hit, and then again in July 19th. Those are, if I recall correctly, that was around the time that tariffs were going into effect. So one theory as to why Skechers is down is maybe because it has more exposure to China. So that's that one. And then we also have here this, just, add and remove it so you can see that. That one is Crocs. And then here, Under Armour. Under Armour has been doing really, really well this year. It was up almost 50%. Now it's lost about half of that. Crocs is up a good 60% this year. Okay, so how does Nike do compared to its peers? Well, it typically outperforms the index, but some of the other companies are actually doing better. Okay, now let's go back to that 5-minute time frame. So let me take all of these off for a moment, and then go back to that 5-minute time frame, and go back to zoom out here a little bit so that we're back to the beginning. Okay, oops, we need to go a little bit more than that. Okay, so here we are. Here's the chart. So now let's look at things. So how did Nike do compared to the S&P 500? Well, the S&P 500 has basically been flat. So here, when we sold, well, it did underperform the S&P 500 that day, so that matters. And now it's outperformed and it's come back to where it was. So I would say, yeah, this news did affect Nike, but it's not a huge move for Nike. Okay, what about some of its peers? Well, Skechers hasn't been doing so well because trade fears are still kind of out there. So that one's probably not a very good comparison, right? Under Armour also, because it was up so much this year and is coming back, it's kind of negative. Excuse me. Crocs is still doing well though, so that's a good comparison. So you can see Nike did well, but not quite as well as Crocs. So here's the thing. Let's just say that I wanted to short Nike. I'm not a huge fan of Colin Kaepernick, not just because he kneels for the anthem, which I don't think that you should protest during that time, but just some of the other things that he's done. This is not somebody that I would want to be basing the future of my company on. So I do think that this could hurt Nike. I'm not sure if it's too significant in the long run. So for me, this isn't necessarily a trade that I'm taking. But let's just say, for the sake of argument, that I really, really believe that this is going to hurt Nike and I wanted to short them off of it. Well, what if the S&P 500 goes up? Well, if the S&P 500 goes up based on the past, Nike is going to go up too. So you short it, you're going to get your face ripped off. So how do you take advantage of this trade? Well, if it was a trade in a particular company, then what I would do is I would hedge it with a different company. So what we want to do is we only want to make money off of the difference between these two companies. So here, this is why Crocs is pretty good comparison. We could buy Crocs and sell Nike and pocket the difference between them. And if we had done that just off of the open, I mean, look at that. You could have made a good 5% or so, right there. That was a good 5%, right? Now, of course, it's come back. So probably the better trade was after shares were down to buy it down here. And now that it's come back, we sell it. And we'll see. I want to see if they get back above their highs. If I come back here a little bit, I really want to see if we're able to stay above this level right here in Nike. We weren't able to do it today, which may be a bad omen for Nike, but we'll see. Anyways, but that's how we would trade it, is buy Crocs and sell Nike, and that way you're only making money off of the outperformance of this company versus this company, and not the performance of the larger market and overall. So we'll revisit this in a few months, maybe next quarter, when we can really see the effects of this in the numbers and see if it's up or down. But next time you see a story that says Nike shares are up or Nike shares are down, just don't click it, because the media just wants you clicks, guys. All right, so if you have any questions, put them in the comments and I'll try and answer them all, and happy trading to you guys.